This is Bruce for Hola Prime, taking a look at crude oil, the U.S. indices, and the New Zealand dollar, starting with crude oil. So, crude oil, after this bottom right here, which is a double bottom, 1, 2, it broke out back above the 20 moving average, has now pulled back to testing it as support, interestingly enough. The momentum to the upside has been strong enough to take it through the orange 50 moving average. And almost up to the blue 200 moving average before we see this bearish reversal behavior today with a shooting star candlestick pattern and engulfing the previous day. So this is an outside day closing near the low more than likely and indicates likely downside, further downside. The low for the day that I've got is 70.79. So a drop below today's low could see, I wouldn't be surprised if it busts right through the 50. I'm not sure that would be support on the way down, but I'm going to keep an eye on this trend line. If it's broken, then I expect a crude to come down more in alignment with this lower trend line and the 20 moving average eventually. Moving on to the NDX. Yesterday we were talking about potential initial targets where resistance might be seen for the NDX, and this area here was highlighted, especially the 20 moving average now at 19,691, and that is almost exactly where we found resistance, along with the completion of the 61.8% Fibonacci retracement level. And then the market just backed off a little bit, but looking at the S&P 500, you could see how it rallied above the purple 20 and it closed above the purple 20. So it's showing relative strength relative to the 20 moving average, which could be a leading indicator to what might be coming to the NDX. And certainly, if that's not happening, I want to pay attention to that as well. If I see resistance at the 20 again, but the S&P is still above the 20, that's telling me that the NDX is still relatively weaker than the SPX. And then we'll have to see what happens next, because I know there's been a little bit of disruption after hours from what I was able to gather. I've been busy doing other things, but the as far as the futures go, and um, there's been some higher volatility. So let's see what happens next and how the pattern's set up. But the 20 moving average is the key right now on both the S&P and the Nasdaq. And then finally, the New Zealand dollar I want to bring up again because I talked about this yesterday as far as a potential bounce off the bottom of this channel, because we have 1, 2, 3 swing highs on the top, 1, 2, 3 on the bottom, and it had already moved away a little bit, but it did have a pullback intraday, which we'll look at shortly overnight, and that provided a potential setup. But nevertheless, the idea being that once we're on one side of the pattern, there's the potential to go to the other side, but at least to go to the center. And so the center was the first target, and you see it made that target, and then relatively quickly, it looks like anyway, turned around and came back down. Going into the 4-hour chart to get a closer look, we could take a better look at this. So I think we were up here at the time yesterday, and it pulled back down to here on a shorter time frame. Would have had a setup for at least this rally, but there's still the potential to hit the other side. There's no setup right now, but this deserves keeping a watch, keeping an eye on it, giving how things are developing. And also notice that the 50 moving average on the 4-hour and the 200 are converging together, creating and the way I look at it, a more significant price level that we want to pay attention to. More weak, indicating weakness when the price is below it, and indicating strengthening when price is above it. All right. That is it for today, traders. Have a great week.